Oh, there we go. Check 1, 2. Once again, we are in the building, Business Credit Builder. Thank everybody for coming. Today, we are going to talk about the top questions about the business loan underwriting process answered. And I do this particular webinar topic so that business owners can understand what the lenders are thinking and what they're doing over there when they take your information, right? So they got this application and then they go and do some stuff. And it's good to understand what that stuff is and what they're looking at, right? And that's why this is a good webinar to check out. All right, so this is what we're going to do. I'm going to share my screen and we're going to get started. All right, let's do it like this. Boom. Send you there. Rock the slideshow. And once again, so now you should see my PowerPoint presentation that says top questions about the business loan underwriting process answered. And you see my website, right? Make sure you'll get the website. Y'all can take notes and ask questions as we go. All right, cool. Okay, so okay. Okay, here goes my info, right? My name is Noel A. Booker Sr. I am the CEO at businesscreditbuilder.us LLC. Check out the contacts, the telephone, the email, right? And there's 2 buttons at the bottom. The green button is how you can get a free guide on how to build business credit. You just go to businesscreditbuilder.us/free guide, right? And then the blue button is free business credit consultation. That is the button you use when you want to talk to my company about how we can help you build business credit and access funding, right? And that's what we do here at Business Credit Builder. We help entrepreneurs and small business owners build business credit and access funding. Okay, that's what we do all day, every day. Okay, make your business credible in the eyes of the lender. You know what? This is the first step in building business credit. And it's the most important step, which is making your business credible in the eyes of the lender. It's the easy steps. It's the easy things to do. It's setting up your business, name, address, telephone, website, all this type of little stuff, EIN number, right? All this type of little stuff. And the easy stuff is the most important piece of you accessing funding, okay? And you can check out other webinars that I have, and I go into detail about how to set up your business properly and credible in the eyes of the lender, okay? Today, we're gonna talk about the top questions about the business loan underwriting process, okay? Okay, loan underwriting is the process lenders use to determine a risk that a borrower will not repay a loan. A high risk of non-payment means higher interest rates or denial. And a lot of times they're determining this risk just by the information you put on your application. So not having this information correct on your application can get you denied before they even look at you, okay? All right, business loan underwriting is a little different. When it comes to business loan underwriting, underwriters are looking at the owner's information as well as information related to the business itself. It is more complicated and usually takes a longer time frame for them to make this determination. Here are some common questions about the process and some tips to make things go as smooth as possible. Okay, question one. What are underwriters looking for? Loan underwriting is not a game of gotcha. Lenders want to make good loans. After all, that's how they make a profit. They need to see not only that the business can repay the loan, but there is a high probability that you will repay the loan. Okay. They also want to see how you will handle repayment if something unexpected happens. Do you have a plan for making payments if things don't go as planned? How to answer number one most effectively. Provide all requested information. Have financials professionally prepared by an accountant and reviewed by a tax attorney. Fill out the application thoroughly and carefully. Okay. Question number two. What will I need to provide the underwriter? Generally, loan underwriting requires you to provide basic personal information, such as name, address, social security number, your business name or doing business as name, your employer identification number, the EIN number, and a copy of your business plan. Not all of them are going to ask for that business plan. Most of the time they ask for the business plan for SBA loans. SBA loans, they definitely going to ask for the business plan. Okay. What will I need to provide? Okay, information about collateral if you're applying for a secured loan. Details about your business, including time in business, annual revenues, number of employees, and more. Financial records, including tax returns, bank statements, and or pay stubs, both personal and business. How to answer question number two most effectively. Write a business plan long before you apply for a loan. Have a mentor or a local small business development center help you. Also, gather records requested and review the details for accuracy. Now, if you need a small business development center around in your neighborhood, right, then I would definitely suggest Operation Hope. Okay, do some research on Operation Hope. And they have some good information for small businesses that is free. Okay, all right. Operation Hope. Okay, here's question number three. How will the underwriter use the data I provide? The data you provide for loan underwriting will be used to do the following. Verify business revenue, verify personal credit scores, verify collateral, determine personal equity in the business, debt service coverage ratio, debt to asset ratio, loan to value ratio. Okay. A lot of these lenders are going to use a lot of these ratios here, and they're definitely going to verify your business revenue and your collateral, and they're going to use one of these ratios. Okay. Verify business revenue. If there isn't enough revenue to support debt payments, you aren't getting the loan. Okay. They would have known that you're making enough money to pay it off, right? Okay. Most lenders have a ratio that helps them calculate how much they are willing to lend to your business. That is, if they approve the application. Generally, for any amount over 10% of your annual revenue is not likely. This is especially true for traditional lenders. Of course, it depends heavily on whether you have any other business debt. Okay. Verify personal credit scores. With traditional lenders, your personal credit score is going to be part of every loan decision. In fact, in some cases, it will determine whether or not they will pursue your loan application at all. Banks generally look at scores in the 700s. Now, when I say this, I'm saying these are the commercial banks, right? These are the commercial banks. And they're looking for 700s. Through some will go as low as 680. The SBA has a minimum threshold around 650. In contrast, online lenders will go as low as 600 or even 500 in some cases. And that also applies, like the online lenders, they're also talking about alternative lenders, okay? Which most funding comes from alternative lenders, not the commercial bank, okay? For small businesses. If you get approval, the lower your personal credit score, the more expensive the financing. High risk means you have to pay more interest. It's going to cost you more to lend this money. Okay. You may also have to provide a personal guarantee or sign off on a UCC blanket lien if your personal credit scores are particularly low. They're going to verify collateral. Not all lenders require collateral, but most banks and SBA do. While the SBA doesn't always require that you fully collateralize a loan, they will require any collateral you may have available. Online lenders will often apply a general lien on business assets. Also, most will require a personal guarantee on small business loans. Determine personal equity, right? Underwriters may want to see how much money you have invested in the business. Lenders want you to have some personal skin in the game. You know that saying, skin in the game. If the business defaults, you have something to lose too. In addition, lenders may use the collateral to determine a number of ratios that can help them in a decision-making process. Debt service coverage ratio. This is a calculation of your business's income and the total amount of business financing you already have. It is calculated as business income divided by business debt. If your ratio is below 1.25, it will be difficult to get more financing. Okay. Debt to asset ratio. I think I spelled that wrong. Okay. This is especially important to underwriting if there isn't a collateral requirement. It shows whether you have enough assets to cover the loan in the event you default. For example, do you have enough equipment or property to liquidate and cover the loan if you can't make payments? A ratio of more than 1-to-1 is favorable. Loan to value ratio. This only applies if there is a collateral requirement. Lenders really want to see that your collateral is worth at least 20% more than you want to borrow. That's why you need a down payment of around 20% to buy a new car or purchase a new house. A lender wants to make sure you meet this ratio. And that's the loan to value ratio. What's up, Ash? Nice to see you. Okay.
Hello.
Okay. So how to answer question number 3 most effectively. Since you know the formulas often used in the loan underwriting process, you can have your accountant do the math. It doesn't make any sense to apply if the numbers aren't in your favor. If you are close, it may be worth a shot. Running the numbers can also give you an idea of what may be required in terms of personal guarantee or collateral. This is helpful information to have before you apply, right? So, you go over your own calculations for your ratios and to see if you're in a good position, right? Okay, question 3. What are the deal breakers? Well, you got to know what the deal breakers are. You don't want to get into a deal breaker and all of a sudden your deal is broke before you even got started, right? So there are a number of issues that an underwriter may uncover that can mean in gain for your loan application. If you know of any of these issues before you apply, definitely disclose them. Knowing ahead of time will allow the underwriters to make note of mitigating factors as they go. If they come across any of these on their own, it is probably game over. Okay, here we go. A recent business cash advances or loans that are discovered but not disclosed in the month-to-date bank activity. Business cash advances or loans, okay, that you must disclose. And that would be disclosed on your balance sheet, okay? When your financials, you have the balance sheet and you have your income statement, right? You also have your cash flow analysis. But on your balance sheet is where they see the stuff that you owe. And you want to reflect that on your balance sheet. An excessive amount of negative days in the bank activity printout. Negative days, right? They don't want to see you in the negative, right? A criminal background history, undisclosed tax liens, or those not in a payment plan, a recent bankruptcy within 6 months or any open bankruptcy, unsatisfied, excessive, or large judgments against your company, less than 50% ownership, depending on the lender, right? A major drop in revenue. They don't want to see major drops in revenue, right? So if they find that out on their own, that's a deal breaker. Negative landlord references, undisclosed default, or a restructured business loan or cash advance. So if you restructured a loan, they want to know that type of stuff, right? So that's the questions. Does anybody have any additional questions that you would like to ask about lending or business credit? And make sure you schedule your free business credit consultation when you have when you want to discuss the products that we offer, right? And in the case that you think you might qualify for funding now, then go to businesscreditbuilder.us/get funding. All right. Anybody got any questions? That'll do it then. And make sure if y'all are watching this on YouTube, make sure you subscribe, like, and comment. Make sure y'all comment, right? On the website, on the YouTube channel, right? All right. So this was a short one today. Thanks everybody for coming and showing up. We do business credit. That's how we do. That's what we do, right? All right. So holla at your boy. Make sure you get your free guide on how to build business credit. Thank y'all for coming, right? All right. What's up, Ash? What's the deal with you?
Hey, how you doing?
I'm all right. I'm all right.
That's good. Yeah, I registered for a few of these. I think different. Uh, for
These
these
webinars.
Eventbrite
Okay.
Zooms. Yeah,
Okay,
I
that's
think I
cool.
registered for all of them. All of them you have.
Okay, cool. Make sure you
Yeah.
come make sure you come early though.
Oh yeah, I know. I know. I was.
I'm just messing with you.
Else.
Yeah. But yeah. So we got some good ones coming up this month. So it's a good
Yeah, I'm
deal.
excited.
And I'm gonna get your emails tonight, and we're gonna start popping tomorrow. All right.
All right, sounds good.
Get
Sounds
you
good.
going. All right. Glad to
Okay. Good.
have you on board. We'll talk to you later.
Yeah, I make a decision. I'm like, I can't. Let me get a coach. I ain't stressing myself out no more.
There you go. There you go. Once
Gotta
again,
invest.
everybody, Ashley Brown. She's a new customer getting down with the business credit.
Oh yeah, invest in
Right.
yourself.
That's it. That's it. Tell them to
Period.
invest. That's
You
right.
gotta invest for real. You can't save your way to rich. You gotta invest. Get to the
That's
next
right.
level.
That's
Yeah.
it. You gotta invest in yourself. That's a good quote for the day. Invest in yourself. All right. Let's end this. We're gonna end this webinar. I'm gonna talk to you tomorrow, and we're gonna get you popping.
All right. Sounds good.
Later.
Okay. Bye.